everyone, I'm Belinda Ford from BHP Communications. I'm joined today by our CEO, Mike Henry, our CFO, Vandita Pant, and today we're going to talk a little bit about our half-year financial results, and it's a chance for you, our shareholders, to hear directly from Mike and from Vandita, not just about the last 6 months, but what our growth outlook is looking like for BHP in the years to come. With that, Mike, I'll start with you. We've seen a series of records in copper and iron ore. Earnings and margins are up, and there's a lift in the interim dividend. So it looks like a strong performance on the numbers, but what's the big story in the results for you?
The big story in our results, well, first, I would just, as you said, this was a very strong half of operational and financial performance, and importantly, achieved safely. That strong performance allows for healthy returns to shareholders, as well as investment in growth. And our copper, for example, this half, partly because of a tightening copper market, but also because all of our effort to grow our copper business. Not only did the business perform well, it generated more than 50% of BHP's earnings this past half for the very first time. We have a number of exciting copper growth options ahead of us to build upon that strong performance, and that's going to sit very well alongside our entry into a new business for us, being potash. During the course of the half, we saw production records at Whale. It's the lowest cost of any major iron ore producer globally and has been for a number of years now. And maybe if I come back to your question about what's the big story, the big story is that the combination of stability and growth, particularly in future-facing commodities and of copper and potash, that's a pretty compelling story. And it positions us to deliver value for shareholders, not only now, but well into the future.
Mike, strong results, but is this as good as it gets for copper at BHP?
No, as good as it is, it's set to get even better. We delivered 30% growth in our copper business over the past 4 years, and in doing so, we've established BHP as the world's largest copper producer. And that's been deliberate. We said that we want to grow in copper. We find the commodity very attractive, and it's important that we align the BHP portfolio with long-term demand fundamentals. So we've grown by that amount already. In addition to that, though, we've got exceptional growth projects, or 4 big growth projects across the world. Overall, we're targeting 2.5 million tons per annum of production, including byproducts, by the mid-2030s. How are we going to achieve that? New concentrator at Escondida, and we're on track to submit the application for a permit within the next 6 months. In Copper South Australia, we have growth plans to 650,000 tons of copper cathode per year, or close to 1 million tons in copper equivalent, so including byproducts, by the late 2030s. In Argentina, we've got this exciting new project in the Vicuña joint venture. That's advancing rapidly. The joint venture applied for what's known as RIGI, which is a enabling or investment enabling bit of legislation in Argentina. They submitted their application for that recently, and when developed, Vicuña has the potential to be a top 5 copper, gold, and silver producing asset globally. And then finally, we have a 45% interest in Resolution Copper in the U.S., in Arizona. This is one of the largest undeveloped copper projects in the world, and in fact could supply 25% of the U.S.'s copper demand for many decades. We are expecting or forecasting a copper supply shortfall over the coming decades, and so more projects are needed. There's more capital that needs to be invested, and that's going to support price. And BHP is just so well positioned for this now. We're starting now as the world's largest copper producer, 4 big growth projects, as I said. We're focused on executing those with discipline, but through doing so, we're going to create great value for shareholders in the coming years.
Vandita, I want to turn now to the dividend, where BHP is paying above its minimum payout ratio of 50%. At the same time, net debt is higher for the half. How do these two marry up? And should our shareholders expect higher net debt levels to constrain dividend payouts going forward?
I would say, Belinda, that very confident that we can balance dividends, attractive growth, and strong balance sheet. As you would have seen, that our interim dividend for first half was 73 US cents per share, which reflects a strong half performance, as well as our outlook, which is confident and growth ahead. We are also starting to do new and exciting things to unlock more capital. Just a couple of months back, we did $2 billion of capital unlock from Whale, power agreements that we signed, which gives us flexibility to invest in growth as well as return value to shareholders. From a net debt perspective, we are well within our target range and very comfortable with our gearing as well. On CapEx, Mike was just talking about our growth projects, and this year we are expecting to invest $11 billion in support of growth as well as on our sustaining capital, and this comes as cash flows remain really strong. As our shareholders know, we have a policy of minimum 50% of underlying attributable profit to be distributed back to the shareholders. And then every 6 months, our capital allocation framework allows for all this cash being generated and being unlocked to be looked at, and every 6 months, dividends being sized, which could be higher than this. We do know our investors like dividends and how important dividends are, including to the hundreds and thousands of our retail shareholders.
I hope so too, Vandita. We've talked about copper, Mike, but I'm keen to talk about potash. It's obviously going to be an important commodity for BHP going forward. And Vandita, I'm keen to hear how that project is going.
We have completed the detailed review of both the cost and schedule for JS1, which is Jansen 1 phase, and we remain on track to deliver first production from JS1 by mid-calendar year 2027, less than 18 months away now. Updated cost estimates for JS1 are $8.4 billion. And this experience is something that we are taking on and making sure the learnings get applied to all our projects and in terms of delivery.
Thanks, Vandita. Mike, anything to add?
Potash is going to be a great business for BHP. We like the commodity. As Vandita said, 18 months away before we see first production. Demand for potash is going to be strong. If you think about it, you've got a growing global population, 8 billion to 10 billion people by 2050. That's more mouths to feed. And they're going to need better food from a constrained footprint of arable land. And that's going to require more potash. We like the industry structure. There's only a few world-class resources in the world out there, and we have one of them at Jansen. And in some respects, potash or Jansen is kind of like our whale asset in that it's large, long life, it's got low sustaining capex, and it's got options to grow through the stages over time as the market develops. That means it's going to have pretty high margins. It's also going to be an important source of diversification for us because it's going to be a new operating jurisdiction in Canada. It has new markets to sell into, and it's a new commodity. So we remain pretty excited about that business.
Almost around the corner.
And the value it's going to create for BHP shareholders over many, many decades.
Let's turn to iron ore now. You mentioned WAIO, Mike, so I'll go to iron ore. There's been concerns that new iron ore supply from Africa could tip the global iron ore market into surplus. And also for BHP specifically, negotiations with China's key iron ore buying agency seem to be more protracted than usual this year. How should we think about changes in the iron ore market? And is there any update on those negotiations? I'll give this to you, Mike.
The good news is that we predicted that we were going to see more supply coming into the market, even as iron ore demand plateaued back in, Vandita, probably mid-2010s.
Yeah.
And that saw us then very deliberately position WAIO for a world of fiercer competition. So we went from not being the lowest cost supplier of a major supplier of iron ore in the world to being sustainably lowest cost, and we've widened that gap over time. We saw that again this past half. It's occurring against the backdrop of Chinese steel plateauing, but plateauing at quite a high level. So Chinese steel has been resilient at over 1 billion tons per annum for, I believe it's 6 years running now. We expect it's going to plateau through, continue to plateau through the middle of this decade. Longer term, we do expect it to decline, and that's why it was important that we get WAIO fighting fit, make sure it's at the low end of the cost curve, so it needs to have the lowest costs out there, and it needs to be operating very reliably. And if you look at this past half, WAIO delivered record first half production and shipments. Now, Belinda, you also asked about CMRG. That's the buying agent for the Chinese steel mills when it comes to iron ore. And we engage in annual negotiations with them, and commercial negotiations are a part of doing business. Tough at times, but expected at our scale. We're taking actions within our operations to preserve flexibility and, importantly, to maintain productivity, which underpins this low-cost position. Now, as we work through some of the commercial dynamic, we have been optimizing our product distribution channels, so selling product through other channels while negotiations continue. But I also want to come back and just remind ourselves and everybody who's watching that we have built and maintained strong customer relationships in China over many decades. And it remains a critically important market for BHP, as well as a partner in business, because they supply many things to BHP as well.
Sticking on topics that are, getting a lot of focus in media, there's been a lot of talk about M&A and activity in the mining sector recently. What do you think's driving this, and how does BHP think about M&A?
So we see cycles of M&A come through our industry from time to time. But we have been so deliberate with our strategy to make sure that we're not dependent on M&A for growth. So when I spoke about copper earlier, I talked about the fact that we have copper growth options in a number of different areas. And so we look for opportunities to build on existing growth or our existing production through further options where we can see value for shareholders. And that's both in places like exploration or early stage entry, but also M&A. Now, when it comes to M&A, we have to be so disciplined in how we go about it. It has to be in the right commodity, has to be for assets that are only these tier one assets that BHP currently owns and operates. And importantly, we have to see the ability to create more value through BHP's ownership. And a great example of that was Oz Minerals. We acquired Oz Minerals a few years back now. And it was because we saw attractive copper market dynamics playing out over time. But in addition to that, because it was proximate to our Olympic Dam asset, we saw the opportunity to bring these assets together, the Oz Minerals assets in Carrapateena and Prominent Hill, together with Olympic Dam, bring those together, combine efforts, potentially use a single set of expanded infrastructure to unlock synergies that otherwise weren't available on a standalone basis. Another example of where we've gone about creating longer-term growth and value for BHP shareholders is the Argentinian joint venture that we've entered into, the Vicuña joint venture. We've done that in partnership with Lundin Mining. It started as a small shareholding in a company called Filo Corporation. But then as we understood the resource better, as we built our relationships with Lundin Mining, we then chose to together acquire Filo Corp and then to create a 50-50 joint venture in a very large copper gold deposit in Argentina. So we're starting from a strong position as the world's largest copper producer. We already have 4 big growth options across Australia, Argentina, Chile, and the US. And our focus firstly, is on bringing these projects along, getting them built. That's going to allow us to grow in copper. We're doing the same at Jansen. And then when it comes to M&A, it's only when the right opportunity arises. And frankly, if there's nothing else that we do over the next decade, but build the growth projects that are currently in our pipeline, that's already such an exciting story for shareholders.
All right, let's change tack a little bit and talk about the policy environment that we're seeing. Vandita, there's been some speculations about how governments might look to balance their budgets. And in Australia, there's been discussion about a cash flow tax and suggestions around increasing taxes on the resources sector. How do you think about that, and what's BHP's view on it?
I'm really concerned that it starts to harm Australia's competitiveness and, frankly, discourage private investment at a time when Australia needs it a lot, and other countries are going out of their way to actively court resources investment. We have seen what happens when royalties push too hard and has a direct impact on investment dollars in a place like in Queensland. In our BMA asset in Queensland, our teams are working really hard, but it is difficult to generate returns when you are paying more in taxes and royalties than in profits. And that was a result of poor consultation with the industry, which means the policy doesn't get grounded in the reality of what needs to happen to have long-term investment, and it damages investor confidence when the rules get changed after the investments get made. So these signals and underlying settings really matter as we look at, Mike was just talking about our portfolio of growth opportunities globally. And as the people watching this would know, our shareholders would know, miners make substantial contribution to economies around the world. To give you some specific numbers, in the first half, BHP has paid $5.8 billion in taxes and royalties globally just in the half. And that is effectively tax and royalty rate of 43% of our profits. BHP is one of the largest taxpayers in Australia and Chile, and that helps, of course, governments fund hospitals, schools, and roads. And we do want to keep contributing, but to do so in a way that gives us confidence so that we can invest and compete over a long term.
Mike, I'm hoping that you can expand a little bit on what you're hearing and seeing in the policy space, because I know you've met with quite a few national leaders over the last year from the US, Canada, and others. What are you picking up in terms of the investment and policy landscape, and what's changing?
So for the first time in a long time, mining has been front and center. We've seen a lot of support out there for getting new mining projects going or getting new processing facilities going, including, in some areas, incentivization of new investment, and countries really focusing on how they can ensure that there is as safe, lowest risk, and as attractive as possible for fresh investment. Now, what's driving this is growing global concern about supply chain security for metals and minerals that are important for the everyday economy, let alone the energy transition and AI transition. So there's a real understanding of that. Some countries are seeing the opportunity simply to stimulate their economies through getting big new mining or infrastructure projects going. And so they're putting in place policies that enable these major resources projects. Examples of that would be the RIGI bill in Argentina, which is helping to attract large mining investments with long-term tax incentives and guarantees of fiscal stability over 30 or 40 years. In the US, we're seeing policy reform to attract new mines domestically and new processing facilities domestically. That includes the US government taking equity stakes in some companies, as well as building strategic reserves to secure the supply of critical minerals. Canada also moving to streamline approvals for major projects and investments, including for the resources sector. So overall, it's been more volatile than it's been for the past few decades when it comes to policies. But from a mining perspective, we're seeing welcome moves on policy issues that we've been vocal on for some time. But I think others, policymakers around the world, are grasping both the need and the opportunity to ensure that they've got policy settings in place that stimulate or attract some of this global capital into investing in mining projects in their countries.
Sounds like mining's firmly on the agenda. Thank you, Mike and Vandita. Thank you to all the viewers who've tuned in to listen today. We hope you've enjoyed hearing from Mike and Vandita on the topics that are shaping our future. And we hope, Mike, you might leave us with a few thoughts on the outlook for BHP longer term.
So this is an exciting time for mining, as I was just touching on. It's also an exciting time for BHP. Metals and minerals demand is continuing to grow, certainly for certain commodities, and those are that's helped to inform our commodity choice. But we're seeing the global population grow by 25% possibly over the next couple of decades. Those people, and the existing 8 billion people, are going to be seeking a better way of life, increasingly living in cities or urban environments, which tends to be metals intensive. You add on to that then the energy transition, the AI revolution, and demand for commodities like copper or potash is only going to be further amplified. And so through our deliberate actions to grow in these commodities, BHP is going to be well placed to capture outsized benefit. Now, it's really important that this increased demand for metals and minerals is met in the right way. We have to, together as an industry, be mining safely and responsibly. Social value is integral to BHP's strategy, and it's going to be important as an industry-wide focus on that as well. We certainly have as one of our objectives that we want to be the partner of choice to host communities and governments around the world, because we know if we combine that with operational excellence and financial discipline, that is kind of the winning formula that's going to allow us to grow value for shareholders. As we've said, stability plus growth options is going to allow us to grow both returns and long-term value. So the outlook for the company, Belinda, is pretty compelling. And I'm really confident that that this team is going to be able to create great value for shareholders over the long term. And we're looking forward to continuing to share progress against our strategy and plans as we go. Thank you.
Thanks, Mike. Thanks, Vandita.
Thank you.